This is Eric Muadha with Muadha.com. It is August the 19th, 2011, and after the market closed this week, and what was a down week, in fact, the market ended the day with the Dow down 172 points, the Nasdaq down about 1.68%, and the S&P 500 down about 1.5%, close to the lows of the day. If you watched my weekend video from last Friday, August the 12th, you are not surprised by the net action of this market this week, because we had called for the market to continue being under pressure last weekend. And so before we go look at the charts for now, here's what Yahoo Finance says about the market. Yahoo sums it up as saying that the Dow Jones had the worst 4-week drop since March of 2009. So hopefully you are on the right side of the trade, even though at the beginning of the week the market was higher, only to end up close to the lows of the year. Let's take a look at the charts here as we go into the weekend. Here's the Nasdaq 1-year daily, and what you see here is the market dropped. I think about Monday, if you draw a straight line around here, Monday we came to this level on the RSI. Once we stalled around there, which corresponds to about 2550 on the Nasdaq, somewhere there. Once we stalled there, and the RSI gave confirmation right there, the rest of it is as they say, the rest of it is was straight down for the market, and so we end the week on a negative note. Market close to the actually fresh daily closing highs going back to September of 2010 on the Nasdaq. Now if you take a look at FAS, one of the reasons why it was down today was because it had begun the day, this is yesterday's close, Thursday's close, with the RSI at 31.61, and because it closed below 30.90 on the daily RSI, it closed below 30.90 on the daily RSI. You can see that the drop ended up being rather significant, about a 5%. Now what I'm looking at here is, and I'm now becoming a little bit open to the possibility of a bounce in the market, is because, you know, as this price is either from current levels or slightly lower, if the price continues going lower, which is now, this was a fresh daily close, closing low, and the technicals keep improving, we might end up having negative divergence, in which technicals improve and the price deteriorates, and eventually that kind of situation can lead to a nice daily bounce, at least for a couple of days. That is something I'm looking and watching for as of right now as you go into the weekend. Until that happens, the market still remains very same as last weekend, seems to be under continued downside pressure. Take a look at the BKX again, a fresh 50, this is a banking index, fresh 52-week closing low there, actually more than a 1.5-year daily closing low. Take a look at now the Nasdaq again from a weekly perspective. Now last week we almost closed unchanged for the week, and that led some to go long, but that was a fake rally. Now if you notice right there, that high right there, which is April of 2010, there was a breakout around there. The market broke out and pretty much stayed above that level for since October of last year, but we were trying to hold that level over the last 2 weeks right there. And if you, today, this week's rally, at the highs of this week, the market was trading slightly above this line. Now once it moved back below the line, that meant that the support has failed, which makes sense why for the week the Nasdaq is down about 6%, which is a big drop. Now let's take a look and see whether we have other. Take a look at the Nasdaq daily. Now as we go into the weekly time frame, which is this chart you have in front of you, we see that there is a possibility next week the Nasdaq might be moving below 30.90 on the weekly time frame, which is going to suggest another down week for the market. And then take a look at the MACDs. Surely they show no improvement whatsoever, and we talked about this last weekend. We see no improvement whatsoever on the MACDs. We suggest still net week to week, this market is going to be under pressure. This is the Dow Jones 3-year weekly chart, same scenario. We were trying to hold support on this line here. We failed, and more importantly, you'll see that the RSI is now prone to breaking below 30.90 this coming week. If that happens, again, you're going to see another big down week for the market. Again, you take a look at the RSI, at the MACDs, you notice there's no sign of a bounce whatsoever. In fact, you see fresh breaks on the MACD and moving below zero on the main MACD time frame, which suggests that there might be continued big point drops on the as far as the Dow is concerned. Now, last weekend I talked about this yellow area here on the QQQ. Now, you take a look at the QQQ. This yellow shaded area here was support in March and June of this year, and we were trying to hold support somewhere around here. We had broken that support, came back, and we are on the underside of that, on the belly, underbelly of this yellow shaded area. And for a brief moment here, for a day or two, we tried to move above that area, but come Wednesday or late Tuesday, we rolled over, and since then the market's been down quite a bit, and that explains that this area has now become a roof, because initially it was a support for the market, but now it seems the market can move above that. We'll keep watching and see what happens in the coming days and weeks. Take a look at the QQQ on a weekly time frame. Again, you'll see we broke this trend here on price, which connects the lows of March 09 and the lows of last summer. And once we broke that, it was pretty much sell signal all the way. And also, if you take a look at the RSI, we have a fresh break on the RSI this week. What that suggests is that more than likely, we might see this RSI continue moving lower in the coming weeks, which is just going to confirm the downside pressure in the market. Also notice that we have a fresh break on the main MACD right now, which again suggests that there is going to be continued pressure in this market, and that pressure is going to be week to week and not necessarily day to day. Dow Transports closed at a fresh daily closing low going back to September of 2011. Again, you see that the reason for this last 3 days down is because if you draw a straight line on the RSI connecting the highs there and the highs there, you draw a straight line, and this is exactly where we stalled, right there. That line connects those three areas, and once we hit that on Tuesday and stalled around there, anybody who was watching that knew the market was going to be under pressure, and more than likely we were going to take out this low, which we did. So everything played out there according to textbook expectations on the things that I personally watch for. Now let's continue here. Again, the Dow Transports on a weekly time frame. This is a 4-year weekly. Now on the Dow Transports, what is really surprising to me is the fact that if you take a look at this yellow shaded area, which is October of 2008, which is we now term as the crash of 2008, if you take a look at the drop, is almost similar in scale to the drop that we've had over the last 3-4 weeks. So I've been saying this to my subscribers, that to me it seems like there's a crash going on in this market and nobody seems to be talking about it. This drop is similar to this one, probably even bigger in terms of percentage points, and yet it seems like nobody's really worried about it. But the bottom line is on the RSI. Once we had this break here, once we had this break on this red line, then the ghost was it was over for the market, and it was seems like to me an easy call. Once this red line was broken, the market was going to be on a free fall as we had expected, and the last couple of weeks have just confirmed that to be correct. Take a look here again now. See whether I can bring that chart back. Now the Dow Transports here, you'll notice the RS, even though it's been down the last 3 weeks, the MACDs are still about to show a fresh break.